Good evening, everyone. How you guys doing? Hope you guys can see my screen. I hope you guys can hear me too. Can you guys see my screen? Can you guys hear me? Good evening. Okay. All right. The person is saying not yet. Maybe it's your network. You can just exit and come back again. Maybe you can hear and see me. I don't know. I'm already sharing my screen. You guys can see my screen. Uche, exit and come back again. Maybe it's from your settings. Every other person is saying they can see and hear me. Okay, I'm just going to start now. Okay. All right. So last class was the introduction to the liquidity-based SNC strategy. So I talked about market structure. I introduced the break of structure, the market structure shift. I talked about the liquidity that I use for my entries, that is inducement. Then I talked about the first point of, because I'd say I make use of 2 points of interest, the other blocks and then the breaker block. And I introduced the other block the last class. I basically just got the introduction of the strategy to you guys. So most people got the understanding right away. Most people are already taking trades and then it's playing out well for them. And for the people that is not yet working for, don't feel bad. Not everyone has the same understanding capacity. Not everyone can understand so fast. Most people will require more lectures, more back testing, more practices. And then some people also ask questions regarding classes that will still be taught. Like there are some questions that people ask that was like that's on a topic that I'm still going to teach later on. You understand? So that's why I said people should exercise patience and allow us even go half of what I'm supposed to teach, or at least have 3 classes. By then, I'm sure I must have covered a vital part of the strategy that people need to actually trade and then be confident in their trades. So because it's only most people that took the trades off of the first setup, most people got lucky because that was what market was presenting at the moment. But there are also things that also goes deeper. There are also deeper things in the strategy that you still need to know about, like knowing when to pick a valid point of interest, knowing when to stop. Trying to look for buys and start looking for sales, all these kind of vital things. So that's why I said for the first part of the strategy, please just do more back testing of what you are taught and avoid taking trades on a live account for now in order not to lose your money. Just save your money until you successfully, at least if you've gone half, you can actually fund a demo account and then practice for like 1 week, 2 weeks. If you successfully trade the strategy that you've learned on that account without blowing it, then you can say, okay, you're ready to move on to a real account, just to be sure that you're not risking your money on something that you don't yet understand. So that is just it. But some people don't really like listening to that instructions. But let me just move on to the second part. So now, like I said, I introduced other block last week, but like I said, I make use of 2 points of interest, which is the order block and then the breaker block. Now, I said the order block is a zone in the market where there are a lot of institutional orders, where there are a lot of block orders in the market. And then I showed how an order block looks like. Basically, if it's a bullish order block, you will see a bearish candle and you see a bullish candle that engulfs it. If it's a bearish order block, you see a bullish candle and then you see a bearish candle that engulfs it. For the bullish order block, a bearish candle, a bullish candle that engulfs it. A bearish order block, you see a bullish candle and then you see a bearish candle that engulfs it. So that's what the other block looks like. Now, having understood that, now this is where I will introduce what the breaker block is. Now, a breaker block is basically a failed order block. Now, pay attention. For each zone in the market, if market makes a move like this, pulls back here, this zone now that pushes market up is where your demand zone is, which is like your order block zone. Then the zone that market breaks past is where your what? Where your breaker block is. If market does another pullback again, this zone that pushes market up here is where your order block will be. And then this zone that market breaks is where your breaker block is. So basically a failed order block is what a breaker block is. For example, you are expecting to take yourself from this bearish order block here, meaning that you expect market to come here and then what, start selling. But in a scenario where price comes to this zone and breaks past this other block that is supposed to sell from, this other block becomes what? A breaker block. So for each zone where there is a breakout, a market structure shifts, a break of structure, there's always going to be a breaker block present. The breaker block is that zone that market broke from. That zone that market broke is where your breaker block is. So for example, if you are looking, if something like this is happening, yeah, this for example, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. If market starts selling and breaks past this zone that you broke is where your breaker block is. If it breaks past this second one, this second zone here is also your breaker block. If it breaks past this last one, this zone here is also what? Your breaker. You understand? Because these zones were other blocks that markets are supposed to probably reverse from. So a failed POI, a failed point of interest is what your breaker is. So let's say, for example, market is what? On a downtrend, making a series of what? Lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. If price eventually starts reversing, for example, and does something like this zone that was supposed to push market, because if you pay attention, market will come to this zone and start selling. So this zone now that market breaks past, that was supposed to prevent market from pushing up, let's say your resistance level, and market breaks past it, that zone becomes your what? Your breaker. If market breaks past this one too, this zone becomes your what? Your breaker. So you can have multiple POIs in one single setup. But the thing is now knowing which one to use for your entry. That is when this rule comes in. The rules in picking the proper point of interest, the right point of interest. If you follow these 4 rules here, you wouldn't make a mistake in picking your POI. Now, before I continue to those rules, you guys can hear me. You guys can see my screen, right? You guys can see my screen. You guys can hear me, right? Okay. I just want to make sure before I continue. All right. Okay. No problem. Okay. All right. Network is bad, so it's not lagging from my side. Just network is generally bad everywhere. I don't know. So, like I said, I've told you what a breaker block is, and I told you what an order block is. So the thing is now knowing which POI to make use of. Now, the zone that pushes market before it breaks structure or shifts structure, that is probably where your order block is. Then the zone that market breaks directly, the one that it breaks, that is where your what? Your breaker block is. So I'll use this setup that I took on GBP on which day was this? This was on the 1st of January, I think. The 2nd of January. Let me check when I took this trade. This trade was on what? It's probably on the 1st of January of this year. So the first trade I took. So I'll explain this particular trade using these rules that I gave out. So first of all, the rules of picking a proper point of interest. This also goes that what you should look out for if you're looking to analyze the setup, the first things you should pay attention for. So number one, it says it must trigger a market structure shift to a break of structure. It means if you open up your chart and you're looking to pick any entry anywhere, you must make sure there has been what? A market structure shift there or a break of structure. Now, if you pay attention to what happened here for this particular zone, market was what? Initially on an uptrend, making a series of what? Higher highs and higher lows, higher highs and higher lows. So the higher highs and higher lows was too much. It was continuous, higher highs and higher lows. Eventually, price did what? Came to this last low that markets made here and did what? And broke past it. Meaning that what? We have gotten our what? Our market structure shift. The first rule in picking a POI says what? It must trigger a market structure shift to a break of structure, meaning that either we see a break of structure or we see a market structure shift, but we must see one present before we can start looking at that particular POI as an entry, or can start looking at that particular trade as a valid one. So we've seen our market structure shifts. So the second part of the strategy now, the second part of the rule, the second rule says it needs to have liquidity protecting it. By liquidity, I mean inducement. So it needs to have inducement. Let me put it in a bracket here. So it needs to have liquidity protecting it. That is, it needs to have inducement. Now, like I said before, inducement is the first valid pullback that market makes after a market structure shift to a break of structure. So the rule is basically saying, first of all, you must see your market structure shift or you must see a break of structure. After that, that pullback that market makes after the market structure shift or break of structure should also be present. So I've marked my market structure shift out. Now got the pullback that markets made after that market structure shift, which is what I marked out as my inducement. Now, pay attention. Like I said, for each zone that market breaks, for each structure shift, for each market structure shift or each break of structure, there's always going to be a what? A breaker block, and there's always going to be a what? An order block. So now, this way your order block zone is probably is around here. It's not really clear on this time frame, but this is where your order block zone is. And then for your breaker block is this particular order block here that failed to hold. Like I said, a breaker block is a POI that fails to hold, which is an order block that fails to hold. This is an order block. Down here is also another order block that failed to hold. So these are what breaker blocks. Each particular order block that market fails to hold from automatically becomes what? A breaker block. So this particular order block here that markets could not bounce off of and start buying from is what your breaker block is. So now, the second rule says it needs to have liquidity protecting it, which is your what? Your inducement. So now, the inducement is right here. The third rule says the point of interest needs to be what? Unmitigated. Now, what do I mean by it being unmitigated? Let's say, for example, this is what your order block. And then, for example, this is your breaker block here. And the market does what? Market does, let's say, a market structure shift here. Now, mitigation means price tapping into a point of interest after there has been a market structure shift to a break of structure. So let's say, for example, now this is your first POI, this blue box here, and then the second POI is this one. If after market does a break of structure or market structure shift, it comes back and touches this first POI here and pushes up, it means that this first POI has been mitigated. And then this second one is still unmitigated. If price comes back again and taps this second one here before pushing up again, that means that what? This second POI has been what? Mitigated. So a POI being unmitigated means that price needs to not have touched this point of interest before. Now, like I said, it being mitigated means after the market structure shift has occurred or the break of structure has occurred, if market touches that POI before the market structure shift occurs, then it has not been mitigated yet. I want to use gold, for example. There was a trade on gold with an order block. I'm coming. Let me see if I can find it. Last week's trade. So last week's trade. Yeah, this order block here. Now, like I said, the mitigation is only valid after a market structure shift has occurred, not before. This order block here, if you pay attention, this week here touched this body of this order block before market did the structure shift. Now, most people would have said that this is mitigation, but because where the last high was in the market was here, and before this last high happened, that was when price touched this other block. It means that this other block has not still been mitigated. When you will say that this other block has been mitigated, is after market did this what structure shift, and then the pullback happened to touch this other block before pushing up. That's when you can see that it's been mitigated. But pay attention, this week that touched this other block, it happened before the market structure shift occurred. So mitigation is only valid after a market structure shift has occurred or after a break of structure has occurred, not before it. So if an order block, if market or weeks or anything touches an order block before it does a structure shift or a break of structure, then that order block is still valid to be used as entry. It's only considered mitigation after there has been a break of structure or after there has been a market structure shift. So let me go back to GJ that I was going to teach. Sorry, I'm a bit sick. So following these rules again, now, like the first one says, it must trigger a market structure shift or a break of structure. So in this particular case, we got a previous uptrend that triggered a what? A market structure shift to the downside. So we've gotten the first part of the rule. The second one says it needs to have liquidity protecting it, which is your what? Your inducement. So we have our inducement right here. We've gotten the second part of the rule. Excuse me. The third one says the point of interest needs to be unmitigated. It means that the pullback, the first pullback that markets will make, which is your inducement, needs to not have touched this point of interest before. It means that this point of interest needs to be untapped after a market structure shift occurred or a break of structure occurred. This point of interest needs to be untapped. Anyone that market has touched after a market structure shift has occurred is no longer a valid point of interest. So now our other block is up here. Our breaker block is also here. Now, following these rules, the first one says it must trigger a market structure shift or break of structure. Yeah, we have that. Second one says it needs to have liquidity protecting it, which is inducements. Yes, we have that. Third one says the point of interest needs to be unmitigated. By the time I made this analysis, this breaker block was still unmitigated. Price has not touched it yet. Like after this market created this inducement, the inducement never touched this breaker block. So this breaker block is a valid entry for me to use as my entry. And this other block is also valid. Now, the one that will now tell you which point of interest you should make use of is now the fourth rule. The fourth rule now says, pick the point of interest that is what closest to your liquidity or your inducement. So what is our inducement? Our inducement is right here. Between this breaker block here and between this other block here, which one is now closest to where our inducement is this breaker block. That was why my entry was from this breaker block and not from the other block up here. This was the trade. This was before when I made the analysis. The structure shift to the downside. The matches my fall A plus setup. I took the entry and then price board hit my take profits. Can you guys hear me? Do you want? Can you guys hear me? Okay. 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 All right. So it's basically this. Let me use an illustration. It's basically this. Let's say, for example, price was on a previous downtrend, making what? Lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. Then there was what? A market structure shift to the upside. So when this market structure shift occurred, this is where our other block is probably is. And our breaker block, the zone that market breaks, is right here. Do you understand? After that, let's say market does what? A pullback, which is our inducement, and then pushes back up again. This is where our inducement is. So the first rule says there must be a market structure shift or a break of structure. So we have our market structure shifts here when price took out this last high here. So we have our market structure shifts here. After that, the second rule says it needs to have liquidity protecting it or inducement. So the first pullback after market did the structure shift or break of structure is what our inducement is. So this is our inducement right here. So this is our inducement right here. Hang on, guys, I'm coming. Stop sending me requests to turn on my AI companion, please. I don't know who keeps sending this request. Samuel, stop, please. I'm coming. So, like I was saying, the rules says there must be a market structure sheet to break or structure. So, for someone said they've been getting market structure sheet examples. Let me use break or structure example too. So, if market is let's say for example, there was a resistance level here and price is doing something like higher highs. higher lows, higher highs, higher lows. Then market does what? Higher highs, higher lows. Then breaks this last high here while also breaking a key level in price, which is what this resistance level here. After that, price will do what? Will make a pullback, which is the inducement, then continue pushing to the direction where it shifted structure, it broke structure. This one is for break of structure. This one is for market structure shifts. So pay attention for break of structure. Break of structure will break structure towards the direction that market was trending at before, while breaking a particular key level. Now that key level can be a support and that key level can be a resistance level, as long as it breaks a particular key level in price. So markets will keep making, for example, if it's making higher highs and higher lows, it will continue making higher highs and higher lows, but it will break a particular key level, be it a resistance level, be it a support level. So it will break one key level. So this is a break of structure. This is a market structure shifts. For market structure shifts, if market is on a downtrend, it will shift structure and start going on an uptrend. For break of structure, if price is on an uptrend, it will break a key level and still retain its uptrend characteristics. So for break of structure, market was on a previous uptrend, making higher highs and higher lows. Then it broke what? A resistance level while still being in an uptrend. So after that, we've gotten the first rule that says market must trigger a break of structure or a market structure shift. The thing is just that the trades that I trade majority of the time is for market structure shifts. I don't normally take break of structures like that because break of structures is for continuations, and that's not really what I look out for majority of the time, but you can look out for it too. But it's just in some rare cases that it presents itself. That's why it seems that the most trades that we're taking is from market structure shifts. It's not my fault, but that's what market has been presenting to me since. So that is why the examples are filled with market structure shifts and not break of structures. You understand? So now for break of structure, this is what a break of structure looks like. It will break a key level. So for example, in this case, it's the resistance level while still maintaining its current trend, which is the uptrend. After that, market will make what? The pullback, which is where your inducement is. So now, these are your breaker blocks. This resistance level that price just broke is where your breaker block is. This other high here that price broke is also where your resistance level is, also where your breaker is. Down here is also a breaker. Here is also a breaker. So for those zones that market breaks, that's where your breaker block is. Now, knowing the point of interest to now use all depends on if you follow these 4 rules correctly. So this is also where your breaker is. Now, the first rule says there must be presence of break of structure or market structure shifts. So from this chart here, we have our break of structure when this resistance level got taken out and market still maintained its current trend. That is what our break of structure is. Second rule says there must be liquidity protecting it, which is what? Our inducement. So our liquidity, which is the inducement, is right here. I'll mark that with IND. The third rule says the point of interest needs to be what? Unmitigated. It means that after price did the what? The market structure shift or the break of structure, price needs to not have touched this point of interest before. So now pay attention. This our resistance zone that market breaks is what? Unmitigated, because price never touched it when it made this first pullback. This last zone that market broke is also what? Unmitigated, because price never touched it too. This one down is also unmitigated. This one here is also unmitigated. Most people now get confused on the one to use. Now the fourth rule now says pick the point of interest that is what? Closest to your liquidity or your inducement. That means if price should come back, the entry you should be looking at to use is this one here. That's where you take your buy from. Now, in a scenario where after price did this what? Break of structure, the inducement happened to be what? Here, before price now pushed up. So here is our inducement. I'm just giving you a scenario. If our inducement happened to be here, I'm going to that with IND too. Understand? So the first rule says there must be what? Break of structure or market structure shifts. So we have that when this resistance level got taken out, while price still maintain this current trend. The second rule says there must be what? Liquidity protecting it or inducement. So we have our inducement here, which is right here. The third rule now says the point of interest has to be what? Unmitigated. And if you pay attention here, this resistance level that price took out is a breaker block. This zone up here that price broke is also a breaker block. This one down is also a breaker block. This one is also a breaker block. But which one is unmitigated? When price did this inducement level, this inducement that price created, it happened to what? Touch this resistance level that got taken out. So it means that this particular breaker block up here has now been mitigated. So that automatically means that this breaker block up here has been disqualified to be used as a valid point of interest. So now, following the fourth rule that now says use the one that is closest to liquidity, our liquidity, which is inducement, is down here. If price should come back down to pick a point of interest, once it uses liquidity, the nearest point of interest that follows all those rules now that is closest to liquidity is this one here. So this is where price will buy from. So following these rules correctly, at the end of the day, the rules now says pick the point of interest that is what closest to liquidity. Same as this previous downtrend, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and there was a market structure shift to the upside. After that, if market creates our pullback, which is the inducement right here, before pushing up, so it means our inducement level is right here. So the first rule says there must be a market structure shift or break of structure. So we have that when price took out this first high here. After that, the second rule says there must be liquidity or inducement protecting our POI. So there's inducement when it made this first pullback. The second rule says the point of interest has to be unmitigated. This breaker up here was not mitigated, so it's valid to be used as entry. This breaker down here is also unmitigated, it's also valid to be used as entry. But the fourth rule now says pick the point of interest that is what closest your liquidity or your inducement. Where is our inducement? Up here. Between these two breakers, and then the other block will also be down here too. So between these 3 points of interest now, which one is valid to be used as entry? Which one fits all our 4 rules criteria? There must be break of structure or market structure shift. Yes, we have that. Inducement. Yes, we have that. The point of interest has to be unmitigated. Means that price needs to not have touched this point of interest. 3 of them are unmitigated. 3 of them have obeyed all these 3 rules. Now, the fourth rule now says pick the one that is what closest to your inducement. Where is our inducement? Up here. Which point of interest is closest to our inducement? Is this one here. So price will take its buy from this particular zone. So, but in a scenario where it's something like this happening, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, then there was what? A market structure to the upside. Do you understand? So now we have our what? Our other block down here. We have our breaker block here, another breaker block here. Do you understand? If our inducement happen to be what? Happen to be here. Let's say, for example, this is our inducement level. Before market pushed up again, this is our inducement. Now pay attention that if this inducement happened to mitigate what? This breaker block. After the market structure shift occurred, our inducement happened to what? Come back and touch this breaker. It means that this breaker has been what? Mitigated. So if you are following all those rules that's in picking a proper point of interest, the first one saying we should have a market structure shift, yes, we have that. Second one says there should be inducement or liquidity. Yes, we have that. Third rule now says the point of interest needs to be unmitigated. Means that after market did the market structure shift or break of structure, this point of interest needs to not have been touched before. So because this is our point of interest, this third breaker, this breaker up here happened to be touched after market did the market structure shift, it means that what? That breaker block is now being disqualified from being a valid point of interest. Now, where is our inducement? Our inducement is right here. Now, the fourth rule now says the point of interest you should pick should be the one closest to your inducement. So if price should come and see this inducement, which point of interest between this other block and this breaker is closest to this inducement? It is breaker block here. That's where you will take your entry. Another scenario again is this. The market is what? Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Then there was what? A market structure shift to the upside. Now we have our what? Our breaker here, another breaker here, and another block here. Now, after that, if our inducement happens to be, let's say here, if our market pushes up, now the first rule says, make sure you have a market structure shift or a break of structure. So we have that. Second rule says, make sure you have inducement or liquidity. Our inducement is this pullback that market made there before it pushed back up. That's our inducement. The third rule says, make sure the POI is unmitigated. Remember, I said by mitigation means price touching a particular point of interest after price shift structure or break structure. So now price shifted structure here, and then came back to make an inducement. And during the process of it making the inducement, it happened to touch this breaker block up here and touch this other breaker block here. So automatically, it means that these two breaker blocks now do not fulfill all those rules of picking a proper point of interest, and therefore has been disqualified as a valid point of interest to be used as entry. So now the first rule, have a structure shift, we have that. Second one, have inducement, we have that. Third one, make sure the POI is still unmitigated. These two POIs are not unmitigated, therefore they have been disqualified to be used as entry. The third rule now says pick the point of interest that is what closest to liquidity. So which POI here obeys all those rules and still is the one closest to liquidity? Is this other block here. So if price will come back, that's why price will now buy from this other block. So all those patterns you see have logics behind them. It's not just drawing a pattern and taking a trade off of it. Understanding the logic behind all those patterns is the most crucial thing. It's not just by picking this is a POI, let me sell from here or let me buy from here. There are logics behind those things. You don't just come out and pick a random point of interest and use. So these rules is actually the logic behind them. So once you come out, before you analyze, have this rule and write it down somewhere. Open up your charts and say, okay, have I seen a market structure shift or break of structure? That's for this particular strategy, this particular one, because other people trade other things too. But I'm talking about for you to take this strategy correctly. You say, does this have a structure shift or break of structure? If you've gotten that, you mark that as number one criteria met. Second one, you say, does this have inducement or liquidity protecting it? If it does, you mark it as criteria 2. 3, you say the point of interest needs to be unmitigated. You now start checking the valid point of interest that are there and find the ones that are unmitigated. The ones that have been mitigated, you cancel them out. Now, the fourth one now says, pick the point of interest that is what closest to your inducement. So out of all those point of interest, which ones are you disqualified? You mark them out. Which ones are still valid? You mark them out. Which one out of all these ones that are still valid is now closest to where my inducement is? That is the one you will pick as your entry. So it's not just by drawing random patterns. Do you understand the logic behind those patterns they are drawing? This gold that I took when during the news, I want to use that as an example. Now, this one, I took this one with another block. Excuse me, I'm a bit sick. So pay attention here. Price was what? Like I said, market has been giving majority of market structure shift trades majorly. They have seasons. I think around last year, July, market was using break of structure, break of structure, break of structure. Now it's basically market structure shifts. I think they have seasons, but the thing is understanding them. Once you do, whichever one market is presenting at that particular season, you use that. So this was during the news time actually. So price was what on an initial downtrend, making what lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. Then there was what this move here that broke this last high here. That means that we have our market structure shifts. Now I'll count my first criteria that says the POI I'm using should have a market structure shift or a break of structure. And like I said, out of every zone that market breaks, there will be the other block that triggered that break, and then there'll be the breaker block that market broke past. Where is our breaker block? Our breaker block is right here. This is this breaker block that market broke past. This is our breaker up here. So we have our first rule, which says there must be a market structure shift to a breaker structure. The second rule says it must have liquidity protecting it. So I've marked out my market structure shift, and then the liquidity is the pullback that market makes after the structure shift or breaker structure. I'll mark it out with this line here. That is what? That is my liquidity, that is my inducement. So criteria 1 has been met. Criteria 1 says it needs to have a market structure shift or break of structure. So we got that criteria 1 already. The criteria 2 says it needs to have liquidity protecting it, which is what the inducement. We have met criteria 2 by marking out this inducement. Now, which point of interest are here? We have our breaker, and then we have our other block. Now, the third rule now says the point of interest needs to be unmitigated. And I say mitigation is price coming to tap a point of interest after there have been a market structure shift to a breaker structure. So we have our market structure shift here, and then this breaker block This was our inducement here. So between this breaker block and this other block, which one is still unmitigated? This breaker block happened to have been touched when price came down to create what this inducement is created. So this our breaker block has been what automatically disqualified as a valid POI to be used as entry. That leaves only what the other block. Now, the fourth rule now says pick the point of interest that is what closest to liquidity. Which other point of interest is here? This other block. Where is my liquidity? My liquidity is this inducement. Which point of interest is closest to it? This other block right here. That was why my entry was from this other block. So is understanding the logic behind all these trades is not just by picking random entries. There are logics behind the trades. I may have the different understanding of it. I may have different reasons why I take a trade from other traders, because, like I said, I didn't learn from a mentor and I did not learn from other traders. I learned from the charts itself. So that was why my explanation to why I take trades or is different from other people, because I learned mine from basically just backtesting the charts, and then I got that from the experience I got from backtesting the charts. So that was how I was able to deviate these 4 rules I have here from backtesting. So the understanding to why the market moves the way it does. If you ask me why this trade reacted from here and not from here, and I look at it, I can tell you why price reacted from this particular place and not from this particular POI just by looking at the rules I have in picking the entries that fits my trading strategy, that fits the strategy that I use, just because I backtested it enough. So it's not just by picking any type of entry. Is you understand, if I ask you, why did you pick this entry here? You can tell me you saw this, you saw this, you saw that. I didn't use this one because this and that. You have logic. So even if you take a stop loss, you hit stop loss, you know that was a planned stop loss, not just a trade that you take and hope on probability that it plays out. So having a core understanding of the rules that guides the strategy that you trade with is very, very crucial and important. Now, have you seen why some trades reacted from an order block and why some trades reacted from a breaker block? Just because we obeyed the rules in picking this POI. So there's no particular way, there's no particular pattern, fixed pattern. It's logic over pattern. Logic and understanding over pattern. So I can tell you, okay, it's not by drawing out, you can take this pattern. Why are you taking this trade here? What did you see? Because if anyone called me out and said, this trade that I took from here, why did I take this my trade here and not from here? I can tell you, yes, I saw my market structure shifts, yes. I saw my liquidity, which is my inducement. My point of interest, my breaker happens to be unmitigated, and my other block is so unmitigated. But why I picked my breaker as my entry is because it's the one closest to my inducement. I've already answered why I took my trade from there. But most people are not sure. That's why I can take a trade, and once it hits stop loss, I'm done. And I'm done because I know that, okay, it obeyed my rules and I hit stop loss. It's okay, I'm done trading. If it hits my TP, I'm not surprised I hit my TP because I knew what I analyzed. That's the confidence that backs up my trades too. Knowing the particular point of interest that market is actually meant to reverse from or to react from, just because I have all my criteria in picking an entry mate. So the logic is more important than the pattern. Don't rush to take a trade if you don't have your criteria met. Now, there are people that sent some examples to me. I appreciate how the January class is moving. Most people are already getting good setups, and most people that are not, don't feel bad yet. It's not something that you do in one day. Something that takes time and constant practice. I didn't do it in one day. I started trading this particular strategy. I started backtesting this particular strategy in 2023 of September 2023, and I perfected it. Like, go to a point where, okay, I can confidently take 10 trades and say I'm losing only maybe 1 or 2 around last year, August, because no one was there to teach me. So most people, I don't know, most people don't have patience and most people don't want to put in the work. But for the people that actually do and the people that want to put in the work, it pays off. You understand? It pays off. On the long run, it pays off. Because I'm just basically like every other trader here. I didn't get any hand-me-downs. There were basically times around last year where all I had to my name was $200 and $500. I've lost money trading. I've lost money. I've blown accounts. But me getting a little $500 and then being able to trade it up to like $10,000 is not something that happens because it's luck or miracles. It's me having a knowledge to back up my, like having a knowledge to back up my trades. So every trader now, there's nothing that has happened to you now as a trader that has not happened to any other trader. You have lost money. Every other trader that's successful has also lost money. The thing is, the knowledge is what separates people. So having proper knowledge of how to trade and then experience matters a lot, because if you take buys from a particular level multiple times and market keeps stomping you out, the chances are you will probably stop taking buys from that particular level. Experience has already taught you that this place is a wrong level to take your trade from. So, like I said, have patience and wait for more classes to be taught. When time goes on, you actually learn a lot more things before you can now jump on and start trying to take a trade in a real account. The market is not running. I had last year, throughout last year, when I started making good money, like $2,000, $5,000, $10,000 from trading. When around July last year, I was making around $2,000 per trade. But January of last year, I was making $200, $300, $200, $500. The most I was making from a trade was $700 last year, January. But before the year ended, I was making 15K, 20K, 10K per trade. From the same knowledge, nobody gave me more capital. I scaled up with the same knowledge I have. So don't be in a hurry. Most people are saying charts that are yet to play out. I tell them, don't be in a hurry. Wait for more classes to be taught. And most people, and also, I may not reply to as much DMs as I can because I have like 200 students here and I wake up from like 200, 300 messages. I try to reply to the ones I can. And then the ones I can't, I'm really sorry, you can text me again if I don't get your messages fast because I do have a lot of students. But most people don't also have questions regarding what I teach. Most people want to send setups that are yet to play out and see if I can give them a quick shortcut so they can take the trade and then take it on a real account. That's not the point of learning. Learning is for you to have long-term knowledge that you can feed off of without having to rely on someone else. And I can already see progress from this January class. They're already doing it. I see people took BTC USD today. They sent the setup to me. Beautiful. Just from one class. Now, most people also have setups that missed their entries and they asked me, why did this trade miss their entry? I said, wait for more classes to be taught. Now, with knowledge of breaker blocks, I'm sure if you go back and test that, you see that trade did not miss entry. It's just because the lack of knowledge on how to pick a proper point of interest made you miss that trade. So that's basically it for this particular class. So if you have questions regarding this particular thing I just taught, you can ask me. And like last class, I said, please ask questions regarding what I teach. And most people ask questions regarding other things, but they don't know the reason why I say ask questions regarding what I just taught is because we have limited time. So just in order to not to avoid people that actually have questions, not being able to ask their own questions, ask questions regarding what is being taught in the class. More classes will be taught, more questions, more things, more clarity on things that you have questions on that is not yet been taught will still be taught. Do you understand? So please, if you have any confusions, you can ask me questions. Just put your hand up and I'll unmute you. This Samuel Ore keeps doing the same thing over and over again. Okay. Emmanuel Uche. Emmanuel. Emmanuel, so you have a question. I'm asking you to mute yourself. Hello.
My question is about
I can't hear you properly.
Can you hear me now?
Yeah, a bit. Yeah,
Can you hear me now?
I can hear you. What's up?
Okay, so sorry, I was asking. My question is about the inducement level. Is it that the inducement level must have another break of structure for it to be a valid inducement?
No, Someone asked me this question in the last class and I answered them. Maybe you were not in the class, so you know what's recording. I said, as long as it gets close to where the last move happened, if this was it must not have another break of structure. Some majority of the time it does have another break of structure, but let's say this is the first break of structure and this is the inducement. I just expect market to just push close to where the last move stopped. Even if it pushes above it, fine. If it makes an equal high, fine. If it goes close to it, fine. Before it comes to now trigger the main point of interest. So if it's equal to it, fine. It can still come and trigger the main point of interest. If it breaks above it, that's having another break of structure, fine again. Does not really matter. Hope I answered the question. Nelson,
Hey, boss, good evening. Can you hear me?
I can hear you. Good evening.
Please, can you go back to that GG chart, that first trade you took? There's something I want to show.
This chat.
The first trade you took, that one, GGJPY.
That's this cell now.
Yes, yes. So if you look from that point of inducement you marked,
Yeah.
why did you not use I think 1, 2, 3, 4, 5. Why did you not use the fifth candle as the inducement that you picked this one that came up? Because after the structure break and it started selling, I can see this buy candle there. So why did you not pick that one? Then you have to use this other one that you used.
Which one are you talking about?
Assuming I can touch it now. After the place
You
that
know, you
you
know, you know
marked,
where our market structure shift was happened was here, and the definition of inducement says is the first pullback. This is the first pullback now.
okay, the first pullback that passes, it must pass the market structure shift.
No, it's the first pullback after a market structure shift. The last low that market made was here. The last load that got taken out was here. That was where our market structure shift is. The pullback that market makes after the structure shift is here. This candle. That was why I marked out the candle as my inducement.
Okay, so this other buy, the first buy candle is not a valid pullback.
Which first buy candle? Which first buy candle? This is the only buy candle. This is the only candle here. This is your inducement. This is the only candle that happens to be here. This is it. That's the inducement. And I stretched it out to this zone. There's no other candle here now.
Okay, thank you.
Ogunto, I don't really know how to pronounce your name, but I asked you to unmute yourself. You have your hands raised. I have a question. Mobolu, Moboluwa Duro. I don't know how to pronounce your name. I'm asking you to unmute yourself. Please hurry so other people can ask their own questions. You're not unmuting yourself. I'm Philip. I have a question.
Yeah, good evening, Tony.
Yeah, good evening.
Yeah, when trading a break of structure and marking a valid order block,
Okay.
you can basically do that on all time frames,
Yeah,
or
I
there
can
are
do it on all time frames. No,
particular time frames.
no, there are no fixed time frames for analysis. You can have it on 1 minute, 5 minutes, 10 minutes, 1 hour. It does not matter.
Okay, so immediately you have your market structure shift, you can look for a valid POI below and trade the strategy.
Yeah.
All right, thank you.
But there's still another thing, but that's what I will teach on the last class, making sure that you are in line with higher time frames. You understand? That will just give you enough convictions that okay, what the lower time frame is doing is also what the higher time frame is doing. So you'll be sure that you're trading in line with the current trend. But it's not in this particular class I will teach you. There are still more things to be taught. Do you understand?
All right, that's what I actually need. Thank you.
I'm King.
All right, thank you so much. Good evening.
Good evening.
All right. Regarding the question Sir Philip just asked now, maybe the market sold. Maybe there's a market shift and there's a kind of inducement, and the market creates another break of structure. Are you getting it? Maybe the market just go above that first high and create a new higher high and create another inducement. Again, that means there's already a double liquidity. So where do you think we should get our point of entry?
The first one, there's always going to be where markets initially change structure from. If market is making lower highs and lower lows, lower highs and lower lows, there's going to be a first zone that market does a market structure shift from. That particular zone that market does the first structure shift from for that particular time that we're analyzing our trade setup. That's where I'm going to pay attention to. Any other noise that's happening from there, I don't really care about it. I'll just have to be patient for price to come and mitigate my first analysis. I'm no longer paying attention to the other inducement that market is making, because there are also going to be different structures that market is going to be creating. Market may still react from that particular one, but it's not going to be as powerful as the main one. So if the other one will react and then give you a small push and all, but the main one that will still continue the general move is still where the main structure shifts happen from.
Okay, because that exact goodbye you took, although I still took the trade, I took the sell and I took the buy though, based on the first, because based on the first class, I just try and apply it. So thank you so much. I really appreciate it.
All right.
Okay.
Please, you guys should please
Hello.
Yeah. What's up?
Good evening. The question I wanted to ask was regarding the rules about the POI, choosing the POI. When choosing the POI, I saw the rules. The first one, the POI must trigger a shift in market structure or a breakout structure. How do I know a breaker block trigger the market structure shift? I understand other blocks I will know the one that breaks structure, the one that shifted the one that initially shifted structure. But for breaker block, I don't understand how you actually know the one that.
I don't mean that the POI has to trigger a structure. I just mean that there has to be a presence of market structure shift or breakout structure. It's not the breaker block triggering the structure shift. As long as this particular trade that you're looking at, there has been a market structure shift, then you have already checked the first rule.
All right.
Yeah.
So either a market structure shift or a breakout structure.
Yeah. It's not really necessary that the breaker is triggering that structure shift. It just means that there's presence of market structure shift before you can start looking at the second rule.
Okay. Yeah. Then I have another question. Just the last question is about. I asked the question in the last class. You were saying that you were going to explain it in this class. It was about that when I said when price creates inducement. It's almost like maybe in a buy trend now, price creates inducement. Sometimes it almost looks like a higher low. When price come and sweep the inducement, how do you know that it's just sweeping inducement or it's actually changing the trend? Like it actually broke that inducement to actually change the trend from uptrend to downtrend.
Like I said, these four rules that I gave now must be present. If you have your analysis, you can never be sure of anything, but if you have your analysis and you have your structure shift, you have your inducement, and then you have a valid POI there, if price comes to that inducement and your valid POI is still present, that's already giving you enough conviction that that is not price creating a lower low, but coming to trigger your point of interest.
All right. Thank you.
Elvis.
Hi, sorry. Hi, can you hear me?
Hey.
Okay, yeah. So I have two questions concerning order block, and I'll just ask two of them so you can just answer me. So when picking your order block here, let's assume for a bearish market, must the bearish candlestick always engulf the bullish candlestick?
Yeah, it has to engulf it. If not, if it does not engulf it, then there has to be like 3 consecutive candles. You can have the first candle, can have the second candle be in the middle. Maybe the second candle did not engulf it, then the third candle will still engulf it. So you still mark that as your order block. But if it does not, and you switch time frames, it's well. Someone asked me this question in the last class. This is just saying that people are not watching that video and people are not practicing it.
No, I actually did watch it. Then my
Someone
second
asked me
question.
that question. Okay.
Oh, okay. Sorry. Then my second question concerning the same order block. When taking order blocks and when looking out for order blocks, must the order block, do we have to look out for an external liquidity? Must the order block has an external liquidity or something like that? Or
I don't pay attention to that. I don't think I've ever given that as a teaching, paying attention to whether it's
I
switch and
just
external,
needed to clarify.
because it's if it fits 4 of my criterias, I'm already satisfied with that POI.
Oh, okay. Thank you.
The brand keeping. Too many questions. We're already running out of time. I will take some few questions again.
Good evening.
Good evening.
So I understood what you taught last class. So this class, I still understood what you taught in this class. But my question is the breaker block. I saw when you marked the breaker block, and I could not really understand why you picked the point you picked for your breaker block. I saw that you didn't pick some weak, and you picked only some you picked only weak, some you picked only the body. So
Let
my
me see.
question is, my question is because my question is now, how do you know the correct rectangle to mark when picking your breaker block? Let's assume
Breaker
you want
block
to
is
pick.
just from the body. I pick all my breaker blocks from the body. There's no breaker block I took my entry from that I picked from the week. I'm always picking from the body of the breaker. Do you understand? It's just like having an other block. That other block that fails to hold. Just pick your entry from the body of that other block as your breaker block.
Okay, please don't remove this chat. I still have a question because I need this entry.
Okay.
Okay, so I understand that your breaker block is from the body. Your stop loss, how did you pick your stop loss? I don't know if I'm pushing too forward but I'm just like trying to understand what.
Okay, let me give you something. When picking your stop loss, like I said last class, I said there are rules in picking an order block. If the wick of the other block is very long, then you're picking your entry from the body of the other block, right?
Yes.
Exactly. So if you are picking a breaker block, now if it's reverse and you pick a breaker block and you pick your entry, the stop loss is majorly where the entry for that other block would have been normally. I don't know if you understand what I mean. For example, now let's say this is an order block. Let's say this is an order block, for example. And where you pick your entry for this other block normally is from down here, right?
Yeah.
If this becomes a breaker block and inverses this other block and becomes a breaker block, if I pick my entry from here, my stop loss will be where I would normally place the entry of my other block. So just here, but just give it a few pips below. Do you understand? So normally,
Yes.
I will pick myself from here. But once market turns this to a breaker block, my stop loss will be below that candle where I would normally pick my entry for this self.
Okay, I understand. I understand now.
Okay.
Okay, thank you.
No problem. We're running out of time. Solomon. Solomon.
Oh, yeah, good evening, bro.
Good evening.
Yeah, my question is on the valid point of interest. That's for the other block. I don't know. Sometimes I watch some of your TikTok posts, so I see sometimes I use the week of the other as the other block, not the body. Why is that so?
I just said it here now. I just said it here now that in the week of the other vlog, excuse me, I just said it now. I don't know if you listen to me. I said it now. I said it in the last class too. That if the week of the other vlog is long, I think the body, the week of the other block is smaller than the body. I think the week. People don't like listening to me. I don't know why. I said it here. I've said it multiple times already.
Okay, sorry. And I don't know if you can highlight a bit on minor structure shift and the major structure shift.
I don't think I thought that. I didn't teach that. That's not part of what I look out for my strategy. Isn't what I trade now? I just trade what I just thought is what I trade. Yeah, there are different. There are people that trade that, and then if it's their strategy, you can ask them on that. But that's not what I trade. Same way people trade trend lines, they don't look at market structure. Some people do top-down analysis, all this one. So everything just depends on what I'm teaching. I didn't teach that, so
Okay, please. What was your? I don't know for your market structure shifts. What's your How can you put it as a valid market structure shift?
once it deviates from the normal characteristics of the trend, if the uptrend is higher highs and higher lows, and market happens to make something like a lower low, that is already a market structure shift. If the normal distance is lower highs and lower lows for a downtrend, and market happens to do something like make a higher high, that is a market structure shift. Once it deviates from the current characteristics of the current trend, that is a market structure shift.
Okay, what if there's let's say it's a market structure shift for a bullish market structure shift. What if the candle that goes up is just 1 week? Can you call that a market structure shift?
As long as it closes above that last high, then as long as the candle, even if it's 1 week, as long as it happens to close above that zone, then it's a market structure shift.
Okay, thank you, sir. That's my question.
Okay. We're out of time. Vicky. Vicky.
Hi. Yes, hi.
Hello.
Okay. So my question was still on, I think Solomon asked, you answered on when you're using the breaker block, you use the body as your entry point. But now, when you're using the order block and the wick is not that long, do we still use the body, the whole body plus the wick, or just the body?
If the wick is not that long, if the body is way longer than the wick, you can use the wick and the body. If the body of the other block is longer than the wick of the other block, you mark your entry from the wick down to the body. But in a scenario where the wick is very long, that's when you mark your entry from the body.
Okay, so but for breaker blocks, we just use the body of the candle.
Yeah, because
Okay.
for breaker blocks, the zones where you would normally pick your entry from is not where you're picking your entry from. If it's, for example, a bearish order block that you're supposed to sell from, the wicks are usually on the down part of the chart, not on the upside of it. So it does not really matter for breaker blocks because the zones where the wicks are and everything is not that side they're picking your entry from. It's usually on the downside, then you're picking your entry from the upside. I don't know if you understand what I mean.
Yes, I've understood. Thank you.
Okay. First, as I answer question, people they raise their hands. iPhone, I don't have a username. I'm asking you to unmute so you can ask your question. I have other things to do, and I'm meeting fast.
Yeah.
Can I say
Hello.
anything? Yeah, good evening.
Good evening. So my question is because I traded good. So on the 5 minutes it was like because I watched your tutorial, your free tutorial on TikTok the other time, like 2 months back. So I already knew breakout block another. But I guess I didn't get this one right because on the 5 minutes it was like a breakout block. So I choose that point instead of using another block on the 15 minutes. So I got sniped out. I don't want to know if it's like a break.
Higher, just always check your higher time frames before you pick your entry. If 5 minutes, like for example, if you have an order block on 5 minutes and you mark it, I suggest looking at 15 minutes also to see what that zone you marked is. You understand?
Okay. Thank you. That's just what I was to know.
Okay.
Good evening, bro.
Good evening.
Please, I have a question regarding how do I know when the market is, because sometimes I used to see your chart and you used to do sometimes risk to reward 1:20, 1:10, and that's to show that you know that this market is automatic reversing from the downtrend to the uptrend. So I don't know if there's a way that we can pick a point of interest and something like that to know that this market is no longer selling, the market is now buying. So I don't know if you understand my question.
It's still by getting all these criteria that I listed here now. Once you have the POI has a structure shift, you have inducement, it's been unmitigated, and then is the closest one to liquidity. If you pick it, you can have 1:20 reward if you want to set it like that. Everything depends on you as a person. If you want to take that risk, you understand. I don't think I've had 1:20 risk to reward trade on one single trade, except except one particular setup, but it's not something that's like usual every time, except on when I keep like adding positions to zones where maybe market breaks another zone, I add another position. That's it. But for a single setup, I think the most I get is 1:9, 1:6, 1:7, 1:10 sometimes. So
So that
it's experience. You understand?
so that means you're placing your take profit in the next resistance or the next support when you are selling.
I've not thought take profits yet.
Oh, sorry. Thank you,
yeah.
brother. Thank you.
I'll take a few more questions and these are already 9, 10. I'm here for more than 1 hour. I have to get ready for the market. I see trade. I'm still a trader. So other questions can come to my DM. If Debbie, raise your hand up now. You're not.
Hello.
Hello.
So what I want to ask is that if you are like, let me say after this class, you want to start practicing after going through the class, are you going to be using one particular pair or are you going to be using different pairs and practicing it?
Up to you now. If you want to trade different pairs, you trade different pairs. If you don't want to stick to one particular pair, that's not really a strategic question. If you want to trade different pairs, you trade different pairs. That's up to you, whatever you want to do. It works regardless of the pair you're trading.
All right, thank you. That's all the question I have. Thank you.
I'll take a few more questions and I have to retire for the day. I think you just have to come to my DM because if you are no longer asking me questions regarding what I teach, you're just asking me different questions now. And it's not fair. Debbie, what's up?
Hi, hello. I just wanted to ask, does this strategy like applies to arranging markets?
Yeah, it does. It does.
Okay.
Yeah, it
And
does.
also, does the strategy also work for synthetic pairs?
It does. It works on all pairs.
All right, thank you.
Okay. I'm tired. I'll take you guys are not reasonable. Okay. Please ask me questions regarding what I teach. If not, can come to my DM and ask another. If I don't reply, test me again later because most people still test me. What's your question? Abu Fix.
Good evening, Tony.
Good evening.
I have two questions. So it's about this recent class and last week class. So you made mention of something like double break of structure. I don't know, maybe you remember something like that. You say it's more confirmation. So maybe you can show us example on the chart, something like that.
Okay. Let me see if I can get a trade that has a double breakout structure. I've not really been taking breakout structure trades recently. It doesn't really give me this thing. But I've not really seen that on the charts lately.
Okay, maybe I should not just leave maybe by next time. Maybe
This is basically what it is. This is basically what it is. Let me just give you an example. Let's say this is a resistance level.
Okay.
You understand? And then price is doing something like this: higher highs and higher lows, higher highs. So for each high that gets broken, that's a single breakout structure you get.
Yes.
So if market makes another higher low, higher high, another single breakout structure, higher high, then it does something like this, breaks this particular structure, and also breaks this last resistance level here. So this is one structure broken, this is another structure. So this is like a double breakout structure. This is where market normally creates inducement, then comes back and then trigger. So these ones can just be one move, breakout structure, pull back, breakout structure, pull back. But once the double breakout structure happens, that's when majority of the time you now see your inducement form and you now see price come back again to trigger your main point of interest before pushing up again. You understand?
Okay. Yes, I understand. So the next question, you made mention of something last week. You said before you start analyzing market, you start from daily time frame. So you say when you enter the daily time frame, you know
Don't worry, I
what
will teach
to
that.
do.
I will still teach that in the 4th class. This is not. We are still getting there. Like
Okay,
this
no,
is.
I was asking because you made mention of it last week. That's what I'm asking.
Yeah, we've
No
not
problem.
gotten there yet. We've not gotten there.
Yeah,
I'm
thank you.
tired. I'm tired. So please, any other question, I've come to my DM. I'm exhausted. Please. That is it. I mean, for this particular class, we'll continue next week. I'll come to my DM again because you guys are no longer asking me questions regarding this particular topic. So, I will send the recording to the class, to the group when it's done processing. You can come to my DM again with the rest of the questions you have, please. Regarding what, because you guys are no longer asking me questions regarding what I'm teaching. You're not asking questions about other things, which is not fair. And I still have to analyze. I still have to trade now. Market opens soon. So please, to my DM, please, 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 please.